All right, members, thank you for joining us today on the TradeXchange Week Ahead webinar. Want to thank everyone for joining us, as always, to those joining us via our webinar and those on our streams. Thank you. And as always, questions in the chat box will be answered at the end of the webinar. So a quick breakdown of last week. Markets saw their biggest weekly decline in 2023, with each market down around 3%. The Dow went negative on the year as volatility continues. We mentioned earlier in January, as goes January, so goes the year. And the one key thing in January was the word volatility. The past week, we focused on inflation as the personal income and outlays number, and specifically the PCE, a key number followed by the Fed, came in much hotter than expected, the largest month-over-month increase since last June. One key headline from last week as well came on the earnings front with Walmart in regards to the consumer, saying it's obviously not as clear to us what the back half of the year looks like. He added that consumers aren't making their choices. We all know on Wall Street does not like uncertainty, and that is a clear indicator on company-wise, especially a company like Walmart, not knowing what the second half of the year could be. Yields continue their truck higher as the 10-year yield hovers at right by that 4% key level. Bond yields are hitting levels not seen in over 3 months. FOMC minutes were released last week, and keep in mind, members, these minutes did not include the recent hotter than expected readings on inflation as of late. And even the FOMC members said they needed to see further evidence of a broad easing in price pressures before any confidence in the sustained downward path in inflation. We ask, what is the thought process now following these recent economic and CPI headlines? Futures are no longer pricing in a rate cut, but in fact, the possibility of a 50 basis point hike. Mortgage rates trending back to 7%, with earnings season almost over, and some key earnings this week in retail, which we'll be going over later in the presentation. Earnings are down close to 5%, hitting worst levels not seen since 2020. And a much larger than expected amount of S&P 500 companies are providing negative outlooks. So back to the Fed. Has the Fed lost control again, as JP Morgan's Diamond mentioned last week? Was the disinflation term a mistake? What about the flip-flops of a majority of all media heads that in January stated the end of inflation is here? So we go back to what we mentioned a few weeks back and what was discussed in a way by JP Morgan's Diamond. Was the disinflation term a tad premature? Will that term be the new transitory? Our job was to provide reality and facts, and from what we have been seeing, it seems like what we saw in January was a hopium trade. And it seemed like a way to distort reality to change perception. One thing, though, that continues to provide a bit of positive is the labor market, as we all know, and commentary from the Michigan sentiment, as consumers and employers are still not showing any effect of rising interest rates, and sales, and also sales of new single-family homes reached the highest level since March of 2022. This week, we await the final big batch of earnings with a lot of retail names reporting. We also have a few key investor days with Tesla and Goldman Sachs. Fed speak on top as always, as well as some key economic reports, which we will go over on the weekend report. Our thoughts on the economy have always been the same. Inflation in thought may be decreasing, but reality is Americans are still feeling the pain in everyday goods, and companies are not lowering prices to compensate for the quote-unquote drop in prices. If people will pay, what makes a business lower their prices? And the biggest question of all, Will the Fed ever get to 2%? From what we are looking at, we think not. Hopefully, we are wrong. Just something to think about when we finalize and finish up our last week views. Frozen vegetables up over 25% from the past few years. Cereal up 30%. Cheese up close to 20%. Soda up close to 30%. Peanut butter 50%. Bread 35%. Potato chips 30%. Tide, bleach 20%. Butter 50%. Eggs 150%. Flour 30%. Pasta 40%. That is what reality is. And something needs to change, or who knows what happens next. So now a quick look at our week ahead report. Upcoming U.S. and world events. As you can see, members, we do have a pretty big amount of top retail names reporting. American Eagle, AutoZone, Abercrombie, Best Buy, Big Lots, Costco, Nordstrom's, Kohl's, Lowe's, Macy's, Target. Some other names as well. We have Zoom, ZN. We have the AI name, one of the key movers as of late, and this AI craze reported. Broadcom, CRM, Dell, Hewlett-Packard, Marvell. Those are some of the names that we're waiting for this week. In regards to the calendar, Monday, we have your durable goods and pending home sales. And we also have Fed Speaks, Fed's Jefferson. Tuesday, on the U.S. side, international traded goods, Chicago PMI, and the consumer confidence. We also have Goldman Sachs' Investor Day. Interesting to see what commentary will come from that event. We also have Fed's Goolsby, first time actual seeing Goolsby on the Fed Speak side. It'll be interesting to see the commentary in regards to their views. On Wednesday, we have the PMI manufacturing, ISM manufacturing, and construction spending. We also have Tesla, TSLA's Investor Day. Thursday, Fed Speak Waller, as well as on the European side, the ECB minutes and the HICP flash. Friday, on the U.S. economic side, PMI composite, ISM services, and Fed's Logan, Bostic, Bowman, and Barkin speaking. As always, members, these data points could be adjusted or changed in regards to any additional Fed speakers on schedule. Check that every morning in the news desk. Company events for the week, as always. Shareholder meetings and investor calls, top conferences. As always, members, you can reach out to us if you have any idea or thoughts in regards to who is speaking during these conferences. You can reach out to us via Ask the Desk. Economic calendar, we went over it through the week. As you can see, we do have a few Fed Speak, a busy day on Friday, though, on the Fed Speak side, as well as some key economic data points that we mentioned on the earlier breakdown list. International top economic calendar. A pretty busy week on the international side in regards to on the Eurozone, some interesting stuff from Canada on their GDP, and Germany with their CPI report on Wednesday. Earnings, as always, members, we do highlight some of the big names. We bold them out throughout the report on some of the names that we'll be waiting for throughout the week. Your fear and greed index, members, even with this volatility, we still have the greed mindset going into this week. So it'll be interesting to see if that changes with regards to what the market does on the upcoming week. Weekly sector performance. Last week, we were all green with weakness in energy. This week, it's the complete opposite. All red across the board with strength and energy. They'll keep weakness in consumer discretionary, communication services, real estate, healthcare, and the list just goes on and on. A quick chart on your 1 year look on the markets, not too much movement. This is your 10-year treasury, the 2 year. This is that recessionary tool that is used by traders and economists. As you can see, every tick below that zero, we do have the gray shadowed areas are the recessionary times. So every time that did break, within a year or two, we do see recession, the downtick break, year or two recession, downtick break, year or two recession. We're still waiting. We are at levels not seen in 20, 30, 40, 50 years. So we are waiting to see if this does result into a recession and how big and long that will take. Your target rate probabilities, As of right now, we are expecting a 25 basis point hike for the March meeting. Your 10-year mentioned as a minus spot 83. Taking a look at your year-to-date returns, some interesting aspects. Not much action in certain commodity plays, but we did see those drops in the NASDAQ, the S&P, and Dow, which is red on the year now. We did see a little drop in copper, down about 5%. Lumber, not too much action. Cotton, a little uptick this week of about 5%. The VIX, though, the volatility index, did see a bump about 8% this week as the weakness in markets continued throughout the whole entire week. Weakness in corn, down about 4%. Even with energy strength, we did see a little weakness in gasoline, down about 4.7%, down close to 2% from last week. Crude oil, not much of a move. And an interesting move, though, we did see in nat gas. Nat gas was trending down 50% year to date, now down 39%. So nat gas did see an uptick last week. Your AAII investor sentiment survey, what a drop on the bullish mindset, from 34.1% to 21.6%. A big move on the bullish mindset, and also on the bearish aspect, a 10% pop on the bearish mindset on the investor sentiment survey. So it's interesting to see. You have your investor sentiment survey, which is a more broader based look on the the bigger end invested mindset, but the greed index still shows a strong greed side. So we have different mindsets, different looks to the market that we can see, and that uncertainty as well is interesting to take point to. Your sector outlook weekly, right now, consumer discretionary, information tech, and communication services still the top three, and utilities, healthcare, and energy still the bottom three on that look. We have some expected IPOs coming this week, as well as your FDA calendar for the week expectations. Those as well can be updated throughout the week. Now we're going to take a quick peek at your charts, and then we'll, if anyone has any questions, we'll go over those as well. Gold daily, no changes to the chart members. Once this uptrend was broken, testing of support levels, we did see weakness ensue. Try to base here, hit resistance at 1900, and then sold right off to the next level of support. As you can see, this is a big range watch on support. We'll be watching this level very closely on gold. S&P, the SPY daily, no changes as well to this chart. Since we are in a bearish trend, we are never able to bounce, we were never able to bounce from last week. Weakness instead continued in the SPYs. We are trading in a very tight range, as you can see from these levels and this level. This is a very tight range to watch for the 390s downside, but that 400 upside move is clear on the bullish side that traders want to see break and volume strength above that 400 level on the SPYs. NASDAQ daily, no changes to the chart as well. We mentioned last report that the NASDAQ tested resistance levels, but could not break above them. And in fact, we had a test and a complete reversal on that day, which did bring markets to new lows the past week. So we are watching this large range in the NASDAQ from the 11, 11.5 to the 12, 12.250 on the NASDAQ. SPY daily on the moving average and trend look. Staying with the triple Qs and your IWMs. Another look at your 10-year yield daily on the moving average and trend look. 10-year yield daily on a more detailed look. No changes to the chart members. Right along the uptrend. It's trading right along this uptrend for now. Another week, another upside move since that range break that we mentioned here. And then we had that downtrend break around the 3.6 level. So we are trading right at a very key resistance point on your 10-year yield, that 4% level, which is going to be closely watched going into this week. Diamonds on a daily, on a moving average play. IWMs, members, no changes to the chart. Last week, we mentioned that we added a downtrend to watch for any possible upside move, and we had nothing. We sliced right through that 190 support and ended right above that 186 level support range that we saw testing from the November and the beginning of January level. So we're watching the IWMs a little closely because we do have a large open move down to 180 if we do break on volume this level support. HYG daily on the moving average and trend look. S&P 500, no changes to the chart. We continue to mention the past report that 4,000 is a level on watch, and we traded not just to it but below it and closed below 4,000 for the week. A level that is closely watched by many traders. You'll be hearing about this throughout the week, that 4,000 level. We even had commentary from by CNBC's Cashin that says a close below 4,000 could add a little nervousness to the market. We'll see if that continues this week. VIX on a daily, it's interesting to see this level. You break to the level, test it, popped it, retested that level, pop, retest again, smaller pop, retest again, another small pop. We'll see if this pop continues, or are we going to retest that level once again? Oil really had not much action this week. We did see it close right at the resistance levels. We'll be watching oil closely, but oil really was basically a non-event aspect of the market this week. US dollar daily. We've been talking about this one for a while. We believe this is a key indicator in regards to market activity. We did add an uptrend this week to watch for any possible downside move in the US dollar. But just look at that chart, members. You had a longer-term downtrend break. And from that downtrend, we had continued action to the upside. We tested resistance here. We tried to test it and sell off, but the volume on that action continued on the upside. Broke that level of resistance, tested it, and then we saw a strong move to end the week on the US dollar. We're watching this very closely, members. We believe that this indicator does impact overall market views, and the recent strength correlates to the recent weakness we've been seeing in the US markets. Bitcoin could not break above that the resistance level that was tested from August of last year. We did try, but we saw that reversal back to lows and ending the week right above those support levels. We'll be watching Bitcoin very closely because it's starting to see some action. So it'll be interesting to see how that correlates with the markets. SMH daily on a moving average and trend lock. Members, once again, we'll be open if anyone has any questions. We have a few questions on the email side that we do get throughout the week. We'll be answering those real quickly. We'll be going on a quick mic silent as we gather those questions. If anyone has any questions, shoot it in the chat box. One of the first questions asked, as always, has been our thoughts on this week. So, members, with earnings season slowly coming to an end, we have a pretty busy week. None of the names that are always mentioned or discussed by the media, but we do have some big retail names. So we'll get an idea of how consumers are doing in regards to the recent action in inflation and market activity. That will be interesting to see. Especially on some of the key names. We'll scroll up a little bit, but some of the key names, what will be coming in regards to comments from Costco, one of the largest retailers that we have on agenda for the week. What is Costco saying? What is Costco seeing? That'll be an interesting view in regards to your consumers. So we'll be waiting for that one. Keying on that commentary, but right now it's all about, members, it's, we have some big economic data points this week, as well as some Fed speaks continuing. It just continues to be on that same mindset. The market, in our opinion, has no real memory. Day to day, you have to understand that volatility is here to stay for now. So we watch markets on a day-to-day basis. There's always a play to be made. we always mention don't fall in love with a specific stock unless it's a very long-term view. You can't look at a stock day to day if your goal is to hold it for 5 to 10 years out. But when it comes to the market now, you have to understand a lot of things out there that could affect the day-to-day activity. One aspect we always mention is the Fed speakers. Stay tuned, listen to what they're saying, because in our thought process, we're still in that good cop, bad cop mentality. Ever since Fed's Powell mentioned that word disinflation in a previous FOMC meeting, it seems that everyone is trying to take that word and turn it into the future of what the market will trade off of. But then you have commentary from other Fed speakers that are so hawkish, you wonder what is really going on here. It's adding to that uncertainty, and markets do not like uncertainty, especially when it comes from a group of people who are supposed to control prices. So it's interesting to see how those correlate into market activity. Sorry to continue on and on about that, but we really believe very strongly that people that have that kind of power should be very cautious in regards to what they're saying, especially when, in our opinion, it manipulates a market. And if it can manipulate the market, the size of the U.S. markets, every single stock can be affected. So we believe, it's something to keep an eye out, clearly an ear on in regards to any of that commentary. Keeping an eye out on these economic reports throughout the week. And then, members, these reports on these earnings coming up will be very interesting to see the mindset of the consumer. Two other things that we'll be watching: Goldman Sachs's Investor Day, as well as Tesla's Investor Day. Everyone talks about Tesla. It'll be interesting to see what is being discussed or said, and that volatility that could impact possibly Tesla stock. And also Goldman, one of the top banks. It'll be interesting to see their views and mindset, not just on the markets, but on the economy and the individual consumer itself. One other question we had in regards to commentary by, we know we have Austin Goolsbee. We clearly have not had any views or comments in regards to their thought process. So it'll be interesting to see Tuesday afternoon the commentary by Fed's Goolsbee. In the thought process is, will he be on the dovish side or the hawkish side? We've seen a lot of flip-flops this year, especially by Fed's Kashkari, one of the biggest doves earlier, now clearly a huge hawk. So it'll be interesting to see what direction the mindset of Fed's Goolsbee would be Tuesday afternoon. And that's the thought process, members. As always, stay tuned, stay ready. Check the news desk always to make sure you're up and running, especially for the market open. We want to thank everyone for joining us today. Enjoy the rest of the weekend. Check the news desk to get yourself ready for Monday's open. Thank you. Enjoy. TradeXchange out.